So once again, good evening, everyone, and thank you so much for joining today's session. And today we are going to talk about trading strategies. And when I say strategies, there is in particular one strategy which we need to discuss today. So Century Financial, as consultants, we continue to work on different strategies and different ideas. And I see a lot of people who have joined the session today were also there in our previous session where we discussed about Eurobuxel as a trading strategy and we understood how bonds work and everything. So today we are going to focus on one very specific kind of strategy, and that will be based on Hong Kong index. And the name of the strategy, it is called BTST, buy today, sell tomorrow, or sell today, buy tomorrow, STBT. There are two forms of these investments. And needless to say, every strategy, what we discuss here, when I'm talking to you, this is for information purposes. And obviously, once you know more about the strategy, and if you want to know more, please join one-on-one sessions with me. Book your time slots whenever you are ready. Please come to our office. We are based in Emart Square. Before you do any trades or before you invest anywhere, please consult with your risk experts. Please consult with your financial consultants, and only then move forward. Till then, please see this session as an informative session only for information purposes. Whatever we are going to talk about is mostly going to be about how you can take advantage of different trading sessions. And in particular to Hong Kong, there has been a lot of research done from our end, and only then this strategy has been prepared. As I said, uh, just learn this strategy or understand this strategy for information, and to get more clarity, do book a one-on-one session with us, and we'll definitely explain you how to execute this as well. So without any further delay, I'm going to share the strategy flyer with you so you can get a fair idea. And this is going to be one very important strategy which we are going to discuss today. So let's understand bit by bit, word by word, how this strategy is going to work. And once you understand this, please feel free use your chat options to ask more and more questions. If you can hear me clearly right now, if you can see my presentation, and I'm just sharing the same flyer also with you right here. Okay, think everybody can see this right here. See, also, I will show you the live platform if we get time here. I hope so. Then once we get some time, we'll definitely go to the live platform and see that how the strategy can be executed, right? And of course, the consultants will let us know that how the execution of the strategy is done, irrespective. If you can, guys, if you can see the PDF right now, please use your chat options to write yes or okay so I can proceed, and I'll get a fair idea as well that you're able to see this and I can proceed easily. A copy of this session will be put on YouTube later on, but the advantage of doing a live session and attending people live is that you get to ask questions live and understand. Please keep a notepad and a pen with you. It will really help you to write how important and how what sort of information is needed for this particular strategy. This strategy goes in different parts. So first part is about what the instrument is, how the BTST works, how the STBT works. Second part is about understanding different sessions of trading, right? Third part is about the numbers and the statistics, that what we have seen back in the past and how we have analyzed it. And at the end, to compare that which part is better, and what is the hit ratio and how much returns have been generated, and what's the drawdown like. Okay, so significant parts of this strategy, and this is what we are going to dedicate it to today. So please, if you can see this, please use your chat options to write yes or okay, and I can proceed further. This way you'll be able to also test your chat options. Just try doing that, so I would know that you can easily ask any questions if you want. Right. I think most of you have replied yes, so I'm going to assume that you can see the entire presentation. Perfect. Now let's move on to the strategy. So intraday opportunity, again, this will be for those investors who or those traders who would like to see or find out intraday opportunities. Daily trading carries an enormous amount of risk, especially in leveraged platforms. So please understand the risk before you place any trades. Now, from an intraday perspective, normally a lot of traders know that you take an assumption or you take an analysis and see that if you have to take a trade for one day or a few hours, you buy something and you probably put a stop loss and ideally uh, calculate how much loss you are willing to take, how much profit you are looking for, and then you place a trade, and that's how you manage your risk. There are different ways of doing intraday trading, and this is exactly one of those important ways to do something what we call it as a BTST, which stands for buy today and sell tomorrow. Write it down somewhere if you wish to. Otherwise, anyways, you can see this later on YouTube. Buy today, sell tomorrow, or sell today, buy tomorrow. So there are two ways, and as the name suggests, BTST means buy today, sell tomorrow. STBT means sell today, buy tomorrow. So how this actually works, let's understanding the strategy first, and you can take a picture of the text if you wish to, or anyways there is a PDF which is available. You can ask your relationship managers who have registered you for this webinar, and they will be able to provide you a copy of this strategy as well. So when we talk about BTST or STBT, it BTST means buy today, sell tomorrow, in which you as a trader buy, let's say if I'm doing a BTST in Hong Kong index. So the strategy is very simple. You buy the Hong Kong index at today's closing price, right? So just before the market closes, you buy that today at the closing price and sell it at the next day when the market opens. This is called buy today, sell tomorrow, BTST. You buy today before the market closes or near at the current day's closing price, and then you sell it, and we'll tell you the time as well that when you should do it, right? So you sell it next days when the market is about to open. Sell today, buy tomorrow is opposite, where you as a trader buy Hong Kong index at sorry, as a trader you sell the Hong Kong index at today's closing price, almost near to the closing price, and buy them the next day. uh, I want to understand how many of you know short selling. If you know short selling or what short selling is, write yes or okay, and I will get an idea that how many of you know, how many of you not, because this strategy is based on the idea of you understanding what short selling is. So if you don't know what short selling is, ask now, and I will explain it to you very quick that how short selling works in a CFD platform. So if you know about it, yes, fine, okay, not a problem. If you don't know about it, just write no. So I'll get an idea that how many of you know about this, how many of not. Okay. So far, I think most of you know. In case also, if there is somebody who did not understand, as I said, one-on-one sessions are there. Short selling, to make it real quick and easy, short selling means that you borrow an instrument which you feel that the prices are going to drop. So you borrow that from the broker's inventory and sell it live in the market. And the moment price drops, you buy it back at a cheaper price and give it back where you borrowed from. So definitely we can do a lot more trainings on short selling. This is something which is very easy. Why it is important for you know to short selling? Because when I say sell today and buy tomorrow, you start your trade with a short sell today when the market closes or it reaches to the closing price in Hong Kong index. This strategy is specially meant for Hong Kong index. Okay, so you sell today at the closing price, buy tomorrow at the opening price. Now, whether we have to do a BTST, which means do we have to buy today and sell tomorrow, or we have to do the opposite, sell today and buy tomorrow. This is going to be decided through different sessions and our assumption of what the next session is going to be like, what the next market session indicates us to do. Just stay with me. I know it's going to be slightly difficult, but once we go through the entire text and understand that how this is going to be carried out. Now, what is the motive of such strategy, which is basically something like Hong Kong index? It has a lot of gap ups and gap downs, right, which happens overnight. The idea of doing this strategy is to take advantage of those gaps, because these gap ups and gap downs occur because of any news, any market sentiments, as you can see what is written over here, right? And it happens before the market opens, right? There are risks also to it, that let's say if you bought today and in the night, let's say before the opening, some news came and Hong Kong opened at a lower price, at a gap, so that time your stop losses wouldn't get hit. It will take the gap price, and that loss could be higher than your anticipation. So there is always a risk in every strategy. And somebody just asked, can you give example of how the gap ups work? Sure. Let me show you how basically a gap up would work. Just one second. So I'll show you how a gap up would look like in a Hong Kong index. I have my live platform right here. So here is Hong Kong 50. This is the index, and I'll explain you what how a Hong Kong 50 index works as well. Look at this price chart of Hong Kong index. Okay, look at this. So what I wanted to show you was somewhere around. So let's say, for example, here, right? Look at this. So from we are looking at 5th of January, right? And this is from 9th of January. So could be a possible weekend. So this is when the market's closed right here. Let me zoom this if we can zoom it. Yeah. So let's say, for example, this is the point where markets closed, and the next week when market opened, it was already down. So where this closed at 16,545, the Hong Kong index, the next week it opened at 16,170, which means 400 Hong Kong dollars down. And these kind of gap openings happens a lot. So if I just zoom out this chart, you'll be able to see that there have been instances day over day. There are always a lot of gap up openings and gap closings as well. Sometimes those gaps get filled, sometimes they don't. So if I tell you, just try to reduce this. Yeah. So now I'll show you the durations. This is every single chart represents 4 hours. Okay. Look at this. Very clear right here. Look at this. Look at this gap right here. Right. Look at this gap. What I wanted to show you was, so sometimes there are a lot of these. So this is a gap down opening. Similarly, there is a gap up opening also. Look at this. So this is where, look at this. This was 13th December when the closing happened at 16,121, and on 14th the opening happened at 341. So there was a difference right here. So this was a gap up opening, right? So BTST is all about buy today, sell tomorrow, where you buy today inching to the closing price. When it reaches to the close, you buy it and then sell tomorrow at the opening. Possibly tomorrow, if there is a opening gap on the positive side, so you will make money. But if the opening gap is on the lower side, you lose. So this is BTST. Sell today, buy tomorrow means that you short sell it today. And if there is a gap down closing tomorrow, opening pay, then you might make a profit. But if the gap opening is on the higher side, then you might lose. That is how short selling works, right? How short selling works, that if the price drops, you make profit. If the price goes up, you lose. So our entire strategy is based on the idea whether the gap openings are going to be on the higher side or on the lower side. Now we have to understand that how these, what are the chances of these gap openings to be on the positive side, on the negative side. Should I go for buy today or sell tomorrow, or should I sell today and buy tomorrow? What is the understanding? Now this is where some statistics is going to get involved. Just stay with me. Again, as I said, guys, this is not the first and the last explanation of the strategy. We are available one on one to discuss this with you. And anytime if you feel that you need to understand more about this strategy, you can come to the office and we'll show you. Now, here are few terms which you should definitely make yourself familiar with. You will see in this strategy the total trades. Total trades will represent the total number of trades which has been done through different sessions. Positive session, when you see the word positive session, it represents the total number of days where the strategy has resulted in positive, right? A negative session means that the total number of days in which this strategy has resulted in a negative session, in a negative result. Hit ratio will represent how many number of times this strategy has resulted positive, right? And it comes in percentages. Returns will represent the total return which has been generated on a account value of $100,000, and drawdown represents the maximum drop which a portfolio has seen from its highest peak value. So the highest it went, and from that highest peak, how much lowest we have seen, the lowest drop which we have seen. Which index we are going to talk about today, where we are going to do this strategy, is going to be a Hong Kong index. Guys, Chinese market has fallen down a lot, right? And from its peak, I think it has already come down almost 50% down. And this is where we have to see that while China is already down by 50%, Hong Kong index is down by 50% from its peak. There are both long term and short term opportunities in it. Again, the risk being the primary factor. Uh, People or the traders will do day trades in it. Some of the investors will buy ETFs, Hong Kong ETFs, and hold on to it for long term. You, in either case, might as well go for long term. If you are going for speculation, please make sure that you understand the risk of the leveraged products. Here, the strategy which we are going to discuss, as I said, Hong Kong index is also called HSI. It's basically the largest trading companies which are there in Hong Kong, or Chinese companies for that matter, which are listed on the Hong Kong exchange, are the part of this particular index. It is one of the important market indicator for Hong Kong and broader Asian markets, if I were to say. Started in 1969. The base period started from 1964. Initially, when it started, the base value was 100, and this represents around 65% of the total market value. So the Hong Kong index which you see, it mirrors the Hong Kong exchange, right? And again, Hong Kong and China has a very unique relationship. So there are a lot of close economic ties between the two regions, and that is why there are a lot of Chinese companies which are listed on Hong Kong exchange. That's why we have picked up Hong Kong index for this. Now let's try to understand the period which we are going to examine today is going to be last 8 months what we have witnessed in Hong Kong index. That period begins from 1st June 2023 to 31st January 2024. As I said, that we have come up with this strategy right now, but the data which we have been analyzing is till 31st January 2024, right? This is going to be the period which we are going to examine last 8 months and how it has worked. The strategy, whether we have to buy today and sell tomorrow, is based on what do we expect from the Hong Kong index the next day, right? If I expect that Hong Kong index is going to open at a higher gap, what should I do? I should buy today, inching to the closing price, and then sell tomorrow as soon as the market opens with a gap, right? But that is only valid if I expect that the gap will open on a positive side. The gap up will open on a positive side. If I expect that Hong Kong will open at a gap at the lower side, then I should sell today and buy tomorrow. Take advantage of that short selling I was talking about. Now, the question comes, how do I know whether it's going to be a opening on a gap upside or the opening is going to be on the downside? And that is what is going to decide the nature of my strategy. Again, obviously, nobody can know 100% that whether markets are going to go up or down. That's going to be insane, right? So, what we do is we go on the game of probabilities. This is where we try to bring statistics and data, and how last 8 months we have understood this. The market runs on different sessions, right? Because there are different sessions. Asian markets open, right? When Asian markets open, we see that Asia is open in the morning, followed by Europe and UK, which is the London session, and then followed by the New York session, which is Dubai time in the evening, right? So the idea is that there are so many sessions which happens, and how these sessions actually work. So this is something which we also need to know. There are different time differences which are there in the running of each session. And when I talk about a market session, please remember this, and this is just for your understanding. In financial markets, we are referring to a specific period during which a exchange is open. So if today I say Tokyo session, so Tokyo session means that the time Tokyo opens till the time Tokyo ends is when the Tokyo exchange is open for trading. This is the time window when investors or traders, they can buy and sell shares, bonds, forex, right? So when I say a market session, it basically the specific time period during which the exchange or that particular market is open for trading. Different markets, they will have different operating hours, right? So when I say a market session, I'm referring to a specific stock market and the time period it is open. So you have to understand, the every stock market session or every market session will have trading hours. They will have opening times, they will have closing times of that particular zone in the exchange. There could be an idea where there have been overlapping of sessions. Like a lot of times when US stock market opens 6:30 p.m. in the evening in winters in Dubai time, Europe and UK is already open by that. So there's a lot of session overlap or multiple markets which are open, and traders get to enjoy that volatility, right? So there is something called regular session, there is something called volatility in the session, and that is why you need to plan your trading activities during those sessions. And this is something which is really important we are going to discuss today. If you see, Tokyo session starts 5:15 a.m. to 1 p.m. All right. London session starts 1 p.m. to 5 p.m. And we are talking about Dubai timings over here. So the Tokyo session starts 5:15 in the morning, stays till 1 p.m. London session starts at 1 p.m. Okay, and ends at 5 p.m. New York session starts at 5 p.m. and then ends at 11 p.m. This is what the session timings are for all these three markets, right? This is the time when exchanges are open from this hour to this hour. Now, let's get back further to the strategy once we have understood the session timings. The analysis of the Hong Kong index, which has been done from 5:15 a.m. to 11 p.m., right? This basically aims to identify how we can trade, and specifically to know that how Hong Kong index gets influenced by the London session. This is what we have to understand. London session, wherever. So now I'm exactly showing you what the flyer says, and take a image of it or write it down, because it is important that we have to understand and we have to identify the opportunity. There's a question right here. It is closing and opening price. Can it be traded after market opens or closes as well? In short, can I leave the position open beyond the session timing? Timing is the UAE time. That is true. The other question which is asked, that can I leave the position open beyond the session timing? You can leave the session. So the buy today, sell tomorrow strategy. If I take BTST and not the STBT right now, if I take BTST for example, you buy it today to the closer price, inching towards the closing price. So you buy it today, and when market closes, yes, when the market closes, you leave that position open, only to close it the next day when the market opens at the opening price. Your answer to your question, can it be traded after the market opens or closes as well? So once the market is closed, there is something called a pre-market or after-market hours. There are some market, like US market trading occurs outside of the regular session, and there are some platforms which provide that facility, but the liquidity is very limited, so the buying selling differences are too high. So very rare that platforms provide that after-market trading sessions. Normally, the strategy which I'm talking about is based on the regular session, which is the primary trading period for a specific type of market. Okay. So I hope that that answers the question, but please ask again if you have any other questions as well. Now, let's take the example. So what we did was we examined this strategy and we found out that where the London session registers positivity, the buy today, sell tomorrow proves very effective, and it gives a 58% hit ratio and a return of 5.3% on an equity of $100,000. This is just a summary of the strategy. I'm going to go very detailed in this. Okay. So just giving you an idea, let's say if I can see the further and give you one by one idea. Okay. Let me show you right here. Okay, let's read the strategy first. So, what we have seen is that every time, or most of the times, not every time, when the London session, which means the London markets, when the London session registers positivity, which means when the London session ends positive, the buy today, sell tomorrow strategy proves most effective, and it shows a 58% hit ratio, which means when London session registers positive, it is seen majority of the times that you should buy Hong Kong index inching towards the closing of, so as the market closes, buy the Hong Kong index and sell it the next day when the market opens. If you do that during the time when London session has registered positive, it's a 58% hit ratio and a return of 5.3% on 100,000 equity is what has been observed in last few months. Now the likelihood of a positive London session out of the total trading days. So now see, there is step 1. What is the step 1? Please write it down in your notebooks if you have. The what is the first important part over here, that it has been seen that when London session registers positivity, there is a 58% hit ratio if you buy Hong Kong index today before the market closes and sell it tomorrow when the market opens. There is a 58% hit ratio of generating a return of around 5.3%, only if the London session registers positivity. Now, point two, the likelihood whether London session will be positive out of the total trading days in last few months. The likelihood of London being positive is around 50%. Right? That's point two. Scenarios, other scenarios, that if London session has reflected negativity, then you go for sell today and buy tomorrow. And this has shown even higher 69% hit ratio and a 7.9% return on 100,000 equity. And the probability of a negative London session is 45%. Now, what do I understand is that when London sessions are positive, right, there is a 58% hit ratio that you buy Hong Kong today and it could end positive tomorrow during the opening. But when London ends negative, there is a 69% hit ratio that instead of buying Hong Kong today, you sell Hong Kong today before the market closes and buy it tomorrow when it opens. And there is a 69% hit ratio on that strategy and a average return around 7.9%. But that happens only when London shows the London session ends negatively. The chances of London session ending negatively 45% depending on last few months. Point three, or scenario third, where both London and New York sessions are closed. The BTST, the buy today Hong Kong and sell tomorrow, has shown around 63% hit ratio with an average return of 3.4%. Right? See, guys, I understand this is something unconventional which you are understanding right now. So, as I said, this is just understand it like a learner. Keep your mindset very open. This is not the first thing you have to do. Don't have to go to your investments and start doing it. I'm just telling you to just hear it out and understand that this is something really different. This is something new from an investor perspective. I'm sorry. So you have to understand that sometimes there are unconventional ways to do conventional trading as well. And when I say unconventional, it doesn't mean that this has not been done before. Like in India, I mean, if you type BTST right now, there are a lot of traders in India. In Nifty, they do a lot of BTST strategies, buy today and sell tomorrow, and especially because these kind of indices they open at gaps, and sometimes the gaps are higher and sometimes the gaps are lower. So a lot of intraday traders they take advantage of BTST strategies, and that's why we are here to try to show you that how you can, if you want to put this strategy into your portfolio, how are the ways you can do it, plus what you need to know, what are the risks associated with that. So first we understood that London session has shown positivity, and whenever the London session shows positive or it ends positive, Hong Kong index, if you buy today and sell tomorrow, the chances of you making a return of 5.3%, there's a hit ratio of 58% on that strategy. On the contrary, when London session ends negatively, there is a higher chance that you could end up generating a return of 7.9%. There's a 69% hit ratio, right? If you sell today and buy tomorrow. So if London is negative, you sell Hong Kong. If London is positive, you buy Hong Kong. And if London is positive, you buy Hong Kong today, sell it tomorrow. If London is negative, then you sell Hong Kong today, short sell Hong Kong today, and buy tomorrow. To summarize it, the as comparison, STBT has a higher hit ratio than BTST. The time when London and New York both are closed, we have seen that a BTST has a 63% hit ratio and a 3.4% return on a 100% equity. Guys, again and again, I'm saying the numbers or the returns which I say, this is not something which is anything assured or guaranteed. It can be riskier. So please understand that this is a strategy which involves risk. This is just a average statistics of what we have observed. It's not sure that this is the exact return what you're going to make. So please understand this before you do anything with your portfolio, right? Now, moving back to this strategy in BTST. So now coming to the timings, right? First thing I understand, you buy today, sell tomorrow. But the question is what time? So in a BTST, you as a trader, you buy closing price 11 p.m. and this is Dubai time on the current day. Okay. You sell, so you buy today, sell tomorrow, BTST. So you buy today at 11 p.m., sell tomorrow at the opening price at 5:15. Okay. Now, why I have kept it at 5:15 the next day? Because market opens at 5:15 and it opens at a gap, and that is the time when you must close. You get up at 7 a.m., you see it doesn't work that way because this strategy is there to take advantage of the gap up openings. So you buy at 11 p.m., you sell it at 5:15 a.m., right? Irrespective of whether it's a profit or it's a loss. Buy today, sell tomorrow, no exceptions. This is how BTST works. And how STBD works, sell today, buy tomorrow. So you short sell it at 11 p.m. at the closing price. And the next day, 5:15 a.m., you buy it back. Reverse trade, right? So you buy today at 11 p.m., sell tomorrow at 5:15 a.m. If it is STBT, if London has ended negative, most likely you short sell Hong Kong today and buy tomorrow at 5:15 a.m. and close your trade. Okay. Next, adopting a BTST on days with positive and closed London sessions. So most likely it is suggested that when London sessions are positive or closed, you adopt a BTST strategy. Okay. And STBT strategy when London is negative. So what we have done is that adopting a BTST on days with positive and close London sessions and STBT strategy when the London session is negative results in around 166 trades, right? So over the last 8 months, what we did, we checked how many times London ended positive or closed, and we checked how many times London ended negative, right? So approximately around 166 trades were done, which when we did this approach, BTST and STBT, this approach achieved a 63% hit ratio and it provided around 16% return on 100,000 equity. So this entire strategy, that when London ends positive or it is closed, you do a BTST. When London ends negative, you do a STBT. Combined together in last 8 months, when we did that, we ended up doing around 166 trades, out of which the hit ratio was around 63%, which provided an average return of 16% on a 100,000 equity. Again, guys, when I'm saying these numbers, when I'm talking about returns, I mean to say this is what on an average we have seen from a limited statistics of last 8 months when this strategy was done. It does not guarantees or assures you of making returns. In fact, as I said, intraday trades are prone to market risk, and if you leverage it, you might lose more. So please be careful when these strategies are done and understand with us. I'm sorry I have to say keep saying this again and again because I see a lot of people are joining right now. So I don't want them to be misguided or misdirected in any manner. So please talk to me before or talk to our risk experts before you do anything. Another question here, that is this called a derivative trade? Or what is a derivative? It's basically a derivative trade. Everything what you do on a CFD platform, CFDs are derivatives. And derivative is very simple because when you trade into a derivative, the price of, so Hong Kong exchange has a price, right? It and the Hong Kong derivative derives the value, and it is called Hong Kong index, whose value is derived from the performance on the Hong Kong Stock Exchange. So derivative is basically a product which does not require a physical exchange of goods and services. So, for example, today, if you want to buy Hong Kong index, you can buy it on a CFD platform without involving any physical exchange of the index. You don't have to pay the full amount. You can just pay a token money, which is called margin, and buy the Hong Kong index. Again, guys, if you want to know more about derivative, I'm here one-on-one session definitely with you, and I'll explain you everything. And it's really important that you must understand the disadvantages and the risk which is involved into derivative trading first before you even think about any positive return. So definitely, if we have some time left, we'll talk about it, or we'll have a one-on-one session and we can understand derivatives, right? Now, coming back to the another part, the study. How we are studying this? The study is done by retrieving the prices of the Hang Seng index, the Hong Kong index, on a 4-hour candlestick. So we are studying these prices every 4 hours. So if Tokyo session, for example, started 5:15 a.m. and it ends at 1 p.m. and London session starts at 1 p.m. till 5 p.m. New York session is 5 p.m. to 11 p.m. So how we are doing is we are calculating the returns in each sessions for 4 hours, right? Now the objective is to predict that if Tokyo session will open with a gap up or a gap down, will it be based like how a London and New York? So Tokyo session is 5 p.m., right? That's when the Asia opens. So what we have to do is we have to predict on the basis of London and New York sessions that how Tokyo session will open up. This is the third part of the strategy where I was talking about that how do I understand whether the gap up opening or the gap down opening will happen, on what this will be based on. So this will be based on the idea we'll study the London and New York sessions, and we'll see the scenarios that if London ends positive and New York ends positive, is there a chance that next day Tokyo will also open positive? If Tokyo opens positive, which means you should buy Hong Kong today and sell it tomorrow at the opening gap up, right? If London ends negative, New York ends negative, is Tokyo next day also opening negative? In that case, you sell Hong Kong today and buy tomorrow because the gap down opening is expected. So what we did, we created four possible scenarios in this. Okay, this is going to be very interesting, guys. Just hear me out on this. So the objective is to predict how the Tokyo session is going to be. Is it going to open gap up or is it going to open gap down? And we are going to calculate this by analyzing and retrieving the prices of the London session for 4 hours candle and for the New York session also. So we arrive four scenarios: London positive and New York positive. London could go positive, New York could go negative. London could go negative, New York could end up positive, or London and New York both end up negative. Right? Now, among all these trading days, the probability of each scenario, which could occur, like the four scenarios, is 25%, 24%, 22%, 22%, right? Very close to equal. So when we predict the return of the next day's Tokyo session, we'll arrive at a result that if London is positive today, there is a 58% probability that Tokyo will open positive the next day. If London is negative today, now the possibility is 69% higher, right? 69% higher that if London ends negative, the Tokyo session will open negative the next day. There is a 69% probability. Furthermore, it must be noted, New York does not seem to have a very significant impact on Tokyo session. So there was no clear pattern. We were not able to identify any relationship with New York and Tokyo, but the relationship between London sessions and Tokyo sessions was obtained by understanding that if London ends positive, there is a 58% probability that Tokyo will open up on a positive side. So we buy today Hong Kong and sell tomorrow. Or if the London ends negative, even higher probability that Tokyo will open negative the next day. So we sell today and buy tomorrow when the Asian session opens. So out of the 83 trading days where the London session was positive, the BTSC resulted in positive returns in around 48 days. So there were 83 trading days where we saw London sessions were positive, and buying Hong Kong today and selling tomorrow when the Tokyo opened, it resulted around for 48 days in positive returns. There were around 75 trading days when London was negative, and we did a STBT where we short sell Hong Kong on that day when London was negative, and the next day when Tokyo opened, it opened negative and we closed with a profit. But out of 75 trading days, it happened 52 days, which means the remaining day the STBT did not work. Correct? So there are chances of loss as well, but we are again looking at the probabilities over here. So what we conclude is that a buy today, sell tomorrow strategy works best on days when London session is positive, and a sell today, buy tomorrow strategy works when London session is negative. So when these trades were taken on $100,000 equity, it was seen that London session, whenever it was positive, the strategy generated around 5% when BTST was done. And when STBT was done, when London was negative, 8% return was generated. On days when London was positive, an average return of 0.3% was generated, right? Now, this is where we understand the part where the return summary comes in. So, London positive, London negative, total trades done when London was positive. Positive session was 48, negative sessions were 35. Hit ratio 58%, return percentage was 5. So, out of total 83 trades which were put in form of BTST when London was positive, 48 trades went right, 35 trades went wrong. 58% hit ratio with an average return of 5%. When London ended negative, and that was for 75 trades, out of which 52 trades made money and 23 trades lost money. So 69% hit ratio. So STBT, when London is negative, works well and with a higher percentage return and with a higher hit ratio. So if I were to summarize it, a BTST, buy today, sell tomorrow, when we see total trades, when London is positive, New York is positive, 43 trades were done and 53% hit ratio. When London was positive and New York is negative, again a BTST is done, 63% hit ratio. But when London is negative and New York is positive, 35% if a hit ratio on a BTST. And when London is negative and New York is negative, 26% hit ratio again doesn't work. And returns are also negative. So a buy today, sell tomorrow works well when London is mostly positive, right? A sell today, buy tomorrow STBT has worked well when London has ended negative. Both cases, when New York was positive or negative, it didn't really matter much. As I said, that there was no clear identification of the pattern. So when London ends negative, it's you sell Hong Kong today at 11 p.m. and buy tomorrow at 5:15. When London ends positive, you buy Hong Kong today at 11 p.m. and you sell it tomorrow at 5:15, right? Apart from the positive and negative sessions of London and New York, there was there was a third scenario also where London and New York both were closed. And this happened around 8 times in the measured period. So, with a probability of 4.8%, around 8 instances, 5 out of 8, where both the times London and New York were closed, Hong Kong delivered a positive return the next day in the Tokyo, and a BTST gave a 63% hit ratio. So when New York and London both are closed, if you do a BTST still, it might give you 63% hit ratio on the strategy and a return of 3%, right? So adopting a BTST on days with positive and closed London sessions, a STBT strategy, and a London session when it is negative, it came up with 166 trades, 63% hit ratio again, and around a 16%. So when this a return summary of this entire strategy, where a BTST was also done, STBT was also done, a return of 16% was generated with a hit ratio of 63%, right? The drawdown, where the maximum drop which we saw was around $1,700, the maximum loss. The loss could be seen throughout the days, but the maximum loss which we saw was around $1,700. This is a period of around 8 months, right? So, questions as we see. So, some of you have started asking questions. Great. So, guys, this is what the strategy is, right? If you have any questions, please go ahead and ask. So, one question's coming in. Uh, can we try to replicate this strategy in a dummy account? Yes, definitely you can. In fact, I'm going to show you right now a live platform before we end this session, that how you can find the Hong Kong index and place a trade in it. Of course, how much quantity to trade is going to be your decision. But as I say, that please keep your risk lower. Try to do this without leverage. I think that's going to be the best thing if you do it without leverage. And analyze what risk is better for you. So definitely, I'll right away just share this the demo platform, and you can also get one demo account from your relationship managers who have registered you for this, and you can try, like, for 4 or 5 days, try to do the strategy and see how it works. You can talk to your RMs, and they will guide you that when London session is positive or not, and then you can do a BTST or a STBT according to you. Another question here is why Hang Seng Index only? It can apply to any trade, any index, or specific equity. Absolutely right. So years ago, we used to do a BTST on Nifty, which is India 50 index. And even now, also, by the way, a lot of Indian traders in India, they do Nifty. Currently, we are not able to provide Nifty because a lot of brokers now here in Dubai, a lot of market makers, they don't provide Nifty due to regulatory restrictions. But in India, a lot of people do Nifty, BTST, and STBT, depending. We used to do a BTST on Hong Kong and on a lot of indices before. But sometimes we have to identify a pattern. Now, right now, if you see, this strategy has 4 or 5 different parts, right? First, you identify 4 scenarios: London positive, New York negative, London positive, New York positive, London negative, New York negative, right? Times when London and New York both is closed, how Tokyo is going to react. So there are different scenarios which we see. And why Hong Kong right now? Because Hong Kong is also available at a discount. So let's say you bought it today, and uh, for some reason the trade may not work, right? And it went down. But because Hong Kong is already discounted at 50, maybe a overall buy can work for you, right? Again, this is a very speculative part, but the major reason for choosing Hong Kong, the very first important reason is the gap. Okay, not every index opens at a gap. I must tell you, Nifty 50 has this knack where it opens at a gap. Another index which opens at a gap is Hong Kong index. S&P 500, Dow Jones, and another few US based indices, they don't open at gaps. This has been observed mostly in Asian indices, and the BTST and STBT is done for that reason, to take advantage of this gap up openings. Because when I say market opens at a gap, that gap can be really high, and then again market gets consolidated. So you have to take advantage of this gap up opening and gap. That is the main reason why Hong Kong index, right? So this cannot be done with every equity, because a buy today and sell tomorrow, it's very instant. Buy, you are buying today near to the closing price, but you are selling tomorrow the moment market opens. Why the moment market opens? Because market opens at a gap. Could be opening gap, could be a closing gap, right? Sometimes the gap is not there, but this has been observed mostly in Asian indices that the gaps are there. That is why BTST and STPT. Right. Another question here. Returns mentioned are net of premium and brokerage charges. Uh, Not exactly. No, the brokerage charges are different, and it depends on your quantity. So, see, I could put, because over here it's done on $100,000 worth exposure. So, of course, sometimes when you buy and hold it overnight, there is a holding cost which is also charged. At the same time, sometimes you might receive also swap, so it can work that way. See, brokerage charges and a holding cost, that is something which can always, like, it normally, if you see the volume of the strategies, it, it will not definitely disturb the trade, otherwise the strategy wouldn't work. So the charges need to be competitive, and they are, as being said. But the returns which you see, the charges, it does not include, because for someone who is trading regularly, the charges will be different. Somebody who just buys and hold, the charges will be different. But to tell you, the charges are very competitive. Even if we were to talk about returns, it will not deplete too much if we were to put charges into it. Use your demo account and you will get an idea how this will work. Please explain return percentage. It is based on total trades, both positive and negative sessions. Yeah, so the return summary which you see, okay, uh, it comprises of last 8 months. That when London ended positive, we did a BTST. When London ended negative, we did a STBT. So the total number of trades which were done were 166, out of which the positive trades which went, as you see, around 105 here, and the negative trades were around 61, which gave us a hit ratio of 63%, and a net return was generated, which was around 16%. So that is something which we saw. What about the lot size? So because this is a CFD, sir, there's no lot size which is a compulsion. You can have as low as 1 unit. In fact, let me just share the platform with you, right? Since I'm asking answering all these questions, just let me also show you much better that I can explain it with the live platform right here. That how do I actually put the strategy in perspective. So right here, I hope everybody can see this. I've just opened the Hong Kong index right now. This is the HK50. Okay. So this is the order ticket. As I said, this exposure was done with $100,000. Okay. So if I put $100,000 right now in the amount, comes up with around 47 units. Or let's take, for example, 47 units in total, which is around $99,000. So this was done for 47 units. For set 47 units, you buy it now, right? And it will be equal to $100,000. If you want to buy a 1 unit also, and you enter the price, it will be the 1 unit totals to $2,000, because the price which you see is in Hong Kong dollars, 16,570 Hong Kong dollars. The 1 unit which you are buying right now in USD, because your account denominations are in USD, so the 1 unit which you buy will be around $2,000. You want to buy 1 unit, hold on to it, do a BTST, you can. You want to do an exposure of 10 units, which will be equal to $21,000. A $21,000 buy and sell would charge you a $30 commission at best, right? So you calculate it. How much exposure you want to do, you decide, because at the end of the day, the risk and the reward is yours. Best way, I will tell you, please start following for, let's say, another 5 days. Take a demo account. Take a demo account from your relationship manager and do it in a dummy account and see how, but do the equal quantities. So let's say 10 units worth $20,000 and see what happens. Buy at 11 p.m. and sell it at 5:15 a.m. Okay. See how it works, but do it as per the strategy. If London session ends positive, okay, you do a BTST. If London session ends negative, you do a STBT. And just do that for 5-6 days and see whether it works out for you. If it doesn't, it doesn't. Ideally, as I said, that we did 166 trades and saw a hit ratio of 63%. So maybe it's a game of volumes. Do it for 10 days or 15 days, right? Even when London is closed, but if Asia is open, you can try to do that and take help of your RMs, please. As I said, that this is a learning session, guys. This has nothing to do with, I'm not asking you to just, open your accounts and do it right away. But yes, this is the recent strategy which we are talking about. So if you do this for 3 or 4 days or 5 days and see how it works out in your accounts, but please, instead of, before you do it on your live accounts, talk to us first, understand everything about it, and most importantly, the risk and the leverage part and the quantities part, and only then go for it. Another question: is it possible to buy in exchange one and sell in exchange two while deploying the strategy? See, what you're trying to do is a sort of a statistical arbitrage. So I normally in a CFDs market, the chances for that is very less. You could do it from an actual exchange, like back in the days, cryptos in US exchange and in Hong Kong exchange varied in the price. So a strategy came out where somebody could buy a Bitcoin from Hong Kong and sell it in US exchange. So that thing is possible on a exchange based platforms, not in CFD based platforms. And sometimes the market makers also, they don't allow such easy money to come in, even if you identify that opportunity. But thank you for the question. I think this is something which a lot of people, they think about it. But so just to tell you this thing, because just like this, we make a lot of such strategies where you can take advantage of different exchanges. See, London session and New York session, and the impact of London and New York, going back, collecting data and identifying that Tokyo would react to a positive London. It takes a lot of research and again a lot of math to it. So we are capable of generating such kind of strategies. So I mean, if you want to learn more and understand different strategies which we have done, please definitely give us a chance. Another question here: timing 11 p.m. and 5:15 a.m. is not convenient. Practical is 5 p.m. and 11 p.m. What if I forget or overslept? See, I understand. Absolutely. I mean, I would definitely understand this thing. But as I said, it's a strategy which is based on that time, because 5:15 when market opens, the gap comes in. After 5:15, like another 10-15 minutes, that gap which opens at, either market will just go high, so it's good for your trade, but possibility a lot of times when gap ups open, it then comes down and fills that gap, right? Or when gap downs open, it sort of comes up and fills that gap. So possibility that there is no point of doing the trade, if you're not able to close it at 5:15. So I understand that the timing is absolutely inconvenient, but that is what the strategy demands. That's why I'm saying that instead of doing it in your live accounts first, for first 4 or 5 days, try to do it in your demo accounts and see whether that works out for you also or not, right? If 3 days, try to get up and see if it works or not. Again, this is not for everyone, but this is how the strategy works. There is a specific 11 p.m. why, because this is when the market closes. 5:15 why, because this is when the market opens. So buy today, sell tomorrow, or STPT, it works exactly in the same manner. Even in India, in Nifty, it works exactly during the time frames. So yeah, I mean, that is a risk. If you forget about it, if you overslept, I understand that could be a possibility. So you have to take that risk into account. Good, very practical questions also. Why can't trader or advisor do it for us? So we can't do it because, again, a trader doing it as per the SCA regulation right now, financial consultants, and even a lot of platform providers here, as per the SCA regulations, they cannot click trades on clients' behalf. So if somebody is doing it, it's probably not regulated or is not supposed to do. What best we can do is we can teach you how to do it, or if you have a person in your, like a lot of clients I meet, they have their sons or daughters or spouses sometimes, and they are willing to learn and do that. We can definitely teach them free of cost, and that is something which we actively do it for all our prospects and clients. So we can't do it for you, but we can definitely teach you and tell you how to see it, and we can provide you a consultant who will help you do it. Another thing is, there is a 24 hours dealing room Monday to Friday. They can execute the trades, but only when they are told to by you. So you still have to get up in the morning and call them, and they can execute it. But there is no discretionary trading facility available with a lot of market makers or consultants at this moment, because as per the SCA regulators, anybody who's licensed from Securities and Commodities Authority cannot execute trades or click trades on clients' behalf. Uh, Question: if we do not take step at morning, no action then? Uh, yeah, I mean, basically, if you have not, what I correctly assume, I mean, please correct me if I don't understand this question. If we do not take step at morning, so no action then. What I understand is that if you haven't closed your trade in the morning, what happens then? So basically, if you haven't closed, then it can either go up or come down. So you are open to that risk. Or if this question actually means that if you did not do any trade, like if you did not sell today or buy tomorrow, just if you can sir, clarify your question, I'll be in a better position to answer it. Uh, is deploying algo trading a possibility for this strategy? If there is an algorithm which can be identified, which can track whether London is positive, and on that basis time your trade to 11 p.m. to buy a specific quantity of Hong Kong and then sell it at 5:15. If you can find that algo, possibly. I mean, if you can develop that algo or find something like that, why not? Normally, a lot of algorithm based. So algo traders are mostly, how algorithm works is on a basis of a technical analysis, that if the moving average of gold, for example, fell down below its 200-day, automatically the gold position will bought. And if it goes above, then it will be sold. So as many times the moving average goes up and down, it will automatically. So it is based on a technical study. This is more of a fundamental observation. So I don't know whether an algo can be put into it. I think it's a very manual sort of a thing which you must do. So yeah, as I said, if no buy or sell, then the trade is still open. So, like for example, if you did not do a BTST on day one, you can try another day. But if you bought today and you did not sell it tomorrow and Hong Kong went up, then it's just pure luck, right? But I would always suggest to follow the strategy, whether it is a loss or profit, you buy today and you sell it tomorrow. That is how the hit ratios have shown. Another question, instead BTST buy today and later possible. Instead BTST buy today and later possible, right? Uh, I mean, if you can clarify that question, please. That instead of BTST, buy today and later possible means what? That you buy today and sell it later, or do it on someday and don't do it on others. Please, if you can just elaborate this question, I'll be in a much better position to answer this. Instead of BTST, you can do STBT depending on whether the London has shown negative results or not. If London has shown positive results, a BTST is recommended. If it has shown negative, then ideally. So, can you use screener to identify the trading opportunities and then take a call on trade? See, that's a very different thing again. What you're talking about is again a it's more of an intraday without any strategy. So ideally, you can always use a screener and identify where the trading opportunities are and take a call. But sir, again, that is going to be a speculation. That is also going to be a speculative trade. But there you are looking at the charts and the trends and doing exactly how basically a day trader would do. What I am telling you is a strategic base towards intraday trading, where you are not looking at just looking at the closing of one session. And we have seen historically that one session, most likely if ends positive, there are higher chances that the next session, next morning, which is Tokyo, will end up positive, a 58% probability of that, right? So what I am telling you is a slightly different mode of speculation followed by a statistical data. What sir you are saying, definitely it can be done. Like for example, you buy today. Now somebody asked that instead of BTST, buy today, sell tomorrow. Can we buy today and sell later? That will become a speculative trade, because what you're saying is that instead of 5:15, what if I sell it at 7 or 8 a.m.? That time the gap up which had opened at 5:15 would have settled down. This strategy, sir, is done to capture those gap ups and down which are very temporary, and that only remains when the market opens, and then eventually it closes. Eventually the gaps close or they're not in that particular volume. So that is the only thing. See, that's why I'm telling you. Again, another question. I don't have to do a trade every day. I can formulate a STBT. Only say the hit ratio seen is higher. So do that. I think this is again a wonderful suggestion. Somebody just said that here, that okay, let me not do a BTST, and I'll, because I know that the higher probabilities of a STBT, so I only do STBT. So do that. But I would always tell you that the volume game is very important. So if I did a BTST and STBT together, my return is around 16%, right? The cumulative return. If I just did a STBT, my return is around 7%. If I just did a BTST, my return is around 5%. So in order to get the best of both worlds, it is always better to go together, right? This is just my perception, because if you do a BTST and STBT together like we did in last 8 months, there were around 166 trades, and we saw a hit ratio of 63, and we saw a higher return as compared to just STBT or BTST. So that is why we are talking about doing it both. But if you are more comfortable doing STBT, why not? Of course, it's definitely, sir, it's definitely your convenience. Again, take two demo accounts and in one do a BTST, in another do STBT. See how it works out for you. See which one works well for you. Question is, the return numbers are net of losses or only the gross number excluding losses? I think this is definitely the net of losses. Definitely not net of commissions, but definitely the net of losses. So if positive trades went 48 and negative trades went 35, so barring the negatives, whatever was the positive is the net return which we have received. Right. So I think, okay, perfect. Great, guys. Great session. And I think a great question answer session as well. And I'm so glad that I'm able to address all the questions, answers all the questions. Guys, once again, as I said, please understand more before. The best way to do is to do it on a demo. If you want to do it on a live trading account, please first talk to us, understand the risk appetite, and then only do it on a live account. uh, the RMs will be available to you to help you out in how to use this. I have shown you right away in the live platform that how you can just buy and sell it. Try to do this. This is something that's slightly different from your regular intraday trading, regular speculation. There's something slightly different to work with. Last week I came with Euro Buxel. See if you have done Euro Buxel right now. Euro Buxel currently is slightly higher. Okay, so every week we come up with something different, and I think it's a great informative session. Thank you so much for joining today. I see a lot of people who came last week has come this week also, and I think when we do the sessions next, I'm sure you guys are going to be there with something different, and we are going to explore a different strategy that time. So today it was all about Hong Kong. It's all about BDST, STBT, and understanding how this works. Once again, thank you so much for your time. I'll be more than happy to answer more questions. You want to have a one-on-one session, want to come to our office? We are located in Emart Square. Come up for a cup of coffee, and we'll definitely sit and understand how to work. Right. So once again, thank you so much, and I'll see you next week with a different strategy around the same time. And register and learn more and be safe. Manage your risk well. My name is Yogesh. You have a good night, and I'll see you soon.